All right. So real quick, just to touch on some highlights. Thank you, Tanya, for sharing a little bit about me. I know most of you I recognize, but there are some agents I haven't worked with. Over the last 4 years, 3.5 that Fluent's been in business. Top 1% in the nation, Influencer of the Year. The 2 highest awards that can be earned in mortgage, literally nationwide, we've earned both. Highest certified in Oregon in terms of service, chapter president, state president, executive chair on the national board, government affairs chair, regulatory affairs chair, and this last year, my favorite was tech chair. Super fun. We'll see how we leverage that to your and my benefits. Most important to me, though, more important than any of that stuff is relationship. And so Michelle and I have been together for 28, almost 29 years now. We have 2 amazing daughters, Rose and Hannah. My youngest is pregnant and in her 3rd trimester. So we're going to have a grandbaby pretty soon. So pretty exciting. Thank you all. And for my personality, if you don't know me, my hobbies and passions are fitness, martial arts, and motorcycles. So I'm a little bit type A. All right. So please unmute yourselves. I'm just want to hear who all on here has heard me speak either in person or via Zoom. Please just say yes, who you are. I'm gonna kind of glance through who's on there. Nice. Thank you for saying it.
Yes.
Oh, yay. Oh, I'm looking through so many old friends. Wow, there's so many I haven't seen in a while. Thank you. Yes, welcome. So you know how we do it. In case you haven't been to one of my classes before, no matter what the material is, I always have the same 3 goals, okay? I want to stuff your mind with knowledge. I want you to learn something. So I'm pretty sure we're going to make that happen today. But more importantly than getting your hour of CE, more importantly than just making you smarter, I want you to be more successful. I want you to make more money, close more transactions, help more people, finish #1 in the rankings, or just have more time. And then lastly, I know it's CE, I know it's mortgage, I know it's VA, but can we all commit to having fun? Okay, so far nobody, you can unmute yourselves. Can we commit to having fun?
Absolutely.
Yep.
Okay.
For sure. Woo!
All right.
Yes.
So little tip for you all from, I did fitness before finance. So I ran gyms for a long time. And one of the things we would always do to help people make a better decision is get them moving a little bit. So if you get the blood flowing, the mind's flowing, you all will be even smarter than you already are. So please just stand up. We'll take 1 minute. Jumping jacks, squats. I'm just going to do some dynamic stretches. Just get your body moving a little bit. We're going to do it for just 1 minute, whatever you like to do, right? Move around a little, right? Just get moving a little. It's Wednesday morning. Oh yeah. All right. Thank you. So we're going to have some fun today. Okay. So to encourage engagement, to encourage your feedback, because even though, not very humbly, I'm pretty smart, you all collectively like have hundreds of years experience. So together, we're gonna raise each other's standards. Whoever answers first and correctly has their choice of Fluent mug. Handmade in the United States. Tanya has one. You'll get your choice, okay? Now, why say VA, right? Why? Because you want more money. So by the end, we'll show you, if you'll just say veteran active military, you're going to make more money. One of the reasons some of you are in the biz. Control over time. By saying VA, you're going to have more time in life. So you can, you know what you want to do with it. Pretty obvious. Excellence. Some people are very type A as well, and they maybe finished #2 in 21, but they want to be #1 in 22, right? So I bet, and I'll show you, if you just say VA, veteran, you're going to finish higher in the rankings just by asking that one question. And then lastly, for some of us, this is where I'm at in my career. I want freedom. I make plenty of money. I'm changing the world, right? I'm doing what I need to do to help my people. I want complete control over time and freedom. That's where I'm at in my phase of my business. And I'm going to bet you if you say VA, you're going to have a little more freedom over time in life. Okay. That's why you should say VA. Unless someone says all cash, right? When you start dancing around, yes, I'm going to get some paid all cash this weekend, they're going to make an offer. Please, and if they say financing, every single time, if you just say, are you a veteran active military? That one phrase, you'll have all those things accomplished. More money, more time, more excellence, more freedom. Why? VA has higher transaction amounts. because it has the lowest rate. It has no MI, right? So higher transactions means you get paid more for the same amount of work. Statistically, it has a much higher close percentage, especially those little zero down loans, USDA, FHA, the dirty FHA, right? Closes way more often. So you're going to get paid way more often. Actually, conventional and FA or VA, flip-flop for number one. So remember, no extra work, no extra time, no extra marketing, nothing more. If you just say veteran active military, by the end of this 50 minutes, you're going to see how you're going to accomplish all those things. Okay. Other reasons you should say VA. Set yourself apart when people are shopping, especially if you're maybe a newer agent and you know they just called two giants. You're like, oh my gosh, I know I'm battling with people who've been in the industry for 20 years. Like, how am I going to do this? Ask them questions they don't. Hey, you're a veteran, are you active military? Nobody else has asked me that. Interesting. What's your benefit? You've earned it. It's subsidized. It's so much better than any civilian loan. Of course, I would ask you that, right? It's just the good thing to do. It's the right thing to do. It's their benefit. They earned it. Let's help them use it. And remember, you're going to get more referrals. Such a tight-knit community. When you see how much superior the VA home loan benefit is, when you start helping them buy more house, having lower payments, having $500,000 at the end of the transaction instead, because you said VA, of course they're going to refer you and you'll win. VA home loan benefits. I'm going to say this over and over. That's a phrase I hope you'll incorporate into your language, is the word benefits. It's not just a loan. They earned it, just like the GI Bill. And if you notice on the photo, male and female, please don't discriminate. 20% of our veterans in active military are female. So please ask every single time, no matter gender. So what I hope that you'll do is the next time that you hear VA, like if you see the dude in the middle right here, see how excited he is, right? Like that's literally what happens at Fluent Mortgage when we get the call, we get the lead, we're going to work with someone. You're like, oh, it's VA, like it's going to close. Like this is how it is at our office. So hopefully by the end of this hour, the next time you get to work with a veteran, you'll be almost as excited. Why your client should use their benefit. They can buy sooner. One of the toughest things for first-time home buyers is that down payment, right? That 5% down. So say on a $500,000 house, 25 grand. That's a big number for a lot of people. VA, nothing down. If it's structured right, literally not a penny out of pocket, buying a home with their earnest money coming back to them. If it's structured that way, they can buy immediately, right? It has the lowest rate. I think you'll be shocked at how far below the civilian market the rates are. So remember, lower the rate, more house. They can buy at the top of the hill instead of the bottom of the hill. They can buy in the best school district because they're benefit. There's no mortgage insurance, right? So that $100 to $200 to $300 a month payment means more home, means 25, means 50, means $75,000 more house just because you asked VA. And again, most offices often to the finish line. So we get to get you paid. They're going to hear happily ever after. They're not going to be stuck in an RV all weekend with their kids and their pets, hoping it's going to work on Monday, right? It closes. Lastly, there's so much opportunity. Only 10.7% utilization in Oregon. 1 in 10, that's it, to use their benefit. Surprise you a little bit? I know it did me the first time. I was shocked. So on our estimated 317,000 veterans in Oregon, that means 270,000 of them, 280,000 of them haven't used their benefit. That's a lot of opportunity, right? That's a lot of people who didn't realize that they could buy something more or something different than they thought they could. And what I would argue and suggest to you, when you look at the giants in our industry, the people that close 300 transactions a month, not a year, right? They're literally people throw down 300 loans a month. They're specialists. They figure out what their competitive advantages and they dial down, and that's how they win. So for some of you, I hope it might be VA. All right. So maybe you caught in my bio, I was a technology chair for the National Association of Mortgage Brokers last year. One of the cool things is I got to work with some of the biggest technology owners in the United States. And based on what our clients needed, we literally created things that have never been done in the United States before, never been done in mortgage and real estate, and it's live today. We also, with the same people, interviewed realtors and said, what do you need? So I'm excited to kind of show you some industry first. So one of those for borrowers, and here's my one shameless plug, fluentmtg.com. If you don't have it in your phone, please save it in your phone. There's a bunch of tools and tips there, right? You can save it to your home screen. I'll show you how if you need to know how. Save it to your computer. But what's cool besides a bunch of stuff here is this shop rates. For the first time, we've given you and the consumer the power to shop the entire nation. So between the Rocket Mortgage, right? Quicken, the #1 retail lender, what their wholesale rates look like. UWM, United Wholesale Mortgage, the other biggest powerhouse in the wholesale channel, their money. Freedom Mortgage, the #1 VA lender. Loan Depot, Caliber. Again, it's going to pull from all the bigs and find who has this absolute sale in the market at that time. So literally, that's in your power and control now, live today. All you do is click on that button. Of course, it's a purchase, right? Your realtors, obviously. Primary residence, second home, whatever. Stick-built, manufactured, fixed rate. Where it's located doesn't matter in Oregon. We don't have any high costs. I chose $647,200 for a purchase price, putting 20% down. Now, obviously in our market with VA, you can go 0 down, but most people are 20% down, right? Or some sort of down to be competitive. So what I would challenge you is, even if someone's putting a lot down, still ask, are you a veteran? Active military, and you'll see why. So in this scenario, 20% down, where everybody else is going civilian realm, right? We're going conventional, we're going Freddie, we're going Fannie. Here's why you don't. Normal conventional loan, 3.875, still a good rate, still in market today. Principal and interest on $517,000 is $2,435. Great loan, right? And then there's tax and insurance on top of that. And that's actually with the buy down. So $3,824, I have to pay them $2,100. You can see we can buy down to 3.5%. Same loan, just because you said VA, is $150 less per month. The rate's 3.5. It's a subsidized loan. It's a benefit, right? Just because you said VA, they're going to save $150 a month. So let's look and see what we could do with all that. There's a lot more. So conventional, end of 30 years, they own the home, right? Thank you so much. By just saying veteran, if they want, they've already got in contract, they're going to save $150 a month. And I'll show you at the end of 30 years, they could also have $250,000. So just because you said VA, they're going to have their house and $250,000. Pretty exciting. Another method, we could say, hey, I'm okay having that higher payment of $150 a month. Let's just throw that money that I usually have to put down into something that makes money. End of 30 years, house and $500,000, just because you said active military, right? Or let's take that money and let's just buy more home. Let's buy at the top of the hill, not the bottom hill. We're buying at almost $700,000 instead of $650. Same payment, same cash from them. Think they're going to be happy? And reminder, when you sell them that much more house, you make an extra $1,250 just for helping them. So here, let's break it down for you, okay? So in that first scenario, $150 more per month. So, and let me back up. I'm not a financial planner. I can't give you tax advice, even though time value money is really easy to calculate. Here's the little calculator. So all we did is we said, hey, 8% rate of return. And I know everybody's getting more than that in their stock market accounts right now, right? But historically, we've never gotten less than 8%. The next 30 years, every single month, we're going to go throw $150 at it. Instead of putting in a civilian loan, just throw in an interest-bearing account, not the beginning. At the end of 30 years, almost $250,000 plus the house, just because you said VA. Think your client's going to be happy? Anybody? Would you be happy? Yeah, I got an extra $250,000 just because they said to my veteran, sweet, I used my benefit. Alternatively, saying, hey, there's another way we can play this. Instead of doing $150 a month, let's just raise that loan amount while the same payment. I have an extra almost $42,000. Same 8% return, same 30 years, nothing extra per month, right? We just have a lump sum. If you throw that $42,000 in an interest-bearing account, you're going to have almost $500,000 at the end of the 30 years. So again, pretty obvious they're going to be happy, right? When you show them this, like we literally visually can show them this, hey, you could go with that generalist. I'm going to say VA, and here's why. I'm going to get you that house too, and you're going to have $500,000. That's why you use me. Or again, let's just buy a whole lot more house, about 50 grand more. Thanks for saying VA, right? Same scenario, same payment, same cash from them. They're buying that super modern on the top of the hill instead of just the one at the bottom. Where this has been a big deal in the last couple of months, especially with increasing interest rates in competitive markets. I've had a lot of realtors say, hey, I've got a veteran who wants to buy something, but they don't think they can buy it because of market. They won't sell because they can't buy. Let us look. Good news, they actually can buy about $100,000 more than you thought. They want to go. So 400 sales, 600 buy, there's $1 million. Happens every week. All right, any questions real quick on why you would want to do it and obviously why your veteran would want to? Cool. Okay, secrets of VA. We're going to battle some myths and rapid fire at you, or Zoom, as Amy said. Again, benefit, not just a loan, right? They serve. They took less pay for the GI Bill. Everyone knows they get to go to school, but so few people understand. Just like that benefit, VA home loan benefit, a subsidized, the most incredible loan on market because they serve, because they potentially died protecting you and I. Here's the other thing too, is everyone's going to battle to get this to the finish line. From escrow, the appraiser, the underwriter, everybody. And when I have an underwriter, the undertaker, right, that's trying to kill the transaction, it's like, no. This isn't a conventional loan. Because here's the reality in conventional world. I'll go, here's Fannie's rule, don't care. Well, let's try Freddie, don't care. Well, here's your rules, don't care. I don't like this one. It makes me nervous. You're dead. With VA, we're like, I don't care what you feel. This is the VA rule. They're supposed to have their house. This is a benefit. Unless you can prove to me and show off VA rule why they don't qualify, they're getting their home. And if you're not going to make the right decision, we'll get the management involved. If they're not going to make the decision, VA will call and get all up in you. They're supposed to get their house. So unless it doesn't appraise or something gets in the way, this is a transaction and a close. Okay, that's a secret. There's no loan limit. Did you know that? Blue Water Vietnam Act. Literally, a veteran could buy a $3 billion with a B dollar home. They could have bought in Sylvester Stallone's house that Adele bought, right? With VA, no money down per rule. Now, right now per street, it's actually about 2 million. So if your veteran can qualify income-wise, literally $2 million is not a penny from them. No mortgage insurance, incredible. There is a distinction for the very best rates and then a slightly higher rate for jumbo on VA. Okay, so unmute yourselves. So remember, here's our very first mug opportunity. The first one to say it and to say it right wins a mug. What is the conventional loan limit for a 1-unit property in 2022? What is the dollar amount that it's set at?
63.
No, way up. So. Anybody, come on.
647,000.
Oh, whoever said that's really close, like you're within a couple $100. Somebody else come in, or same person, 647 what? It's mortgage.
647.2.
Yeah, who said that?
Clark Caswell.
Hey, Clark, hey, it's nice to have you on. I just met you a couple days ago. Hey, make sure you connect with Mike. We'll ensure you get your cut. We'll either go to you or you can come to here either way. We got you. Good job. So $647,200 is the conforming loan limit. It went up 100 grand, right? Okay, bonus, it's not VA, but if it's a conventional loan, every unit you add increases that dollar amount. So for a 4-unit, it's like $1 million. So you're not saying jumbo, literally with $1 million loan, if it's a 4-unit civilian, 5% down best rates. VA, it's no down though, okay? Assumability, that means literally someone else can come in and take over your paper. That's how loans were done in the 80s. If we hit 18% again, think how valuable my 1.75% loan will be. Think how valuable our entire rest of our book, who are at 2.25% money, is going to be. Like they'll sell their house for $1 million and then sell their paper for 200 grand. Twice moved manufactured, can go VA. up to a fourplex, 0 down. They have to live in one unit, but literally there's no 15, 20, 25% down. I've got a realtor who bought a 3-plex in Corvallis, renting out 2 sides, cash flowing day 1, not a penny from him, literally gets to travel all over Europe because his entire mortgage is paid for, and he gets several $100s a month because of his VA benefit.
How long do you have to be owner occupied? 2 years?
Great question. It's 1 year per VA rule. Obviously, if we want to avoid capital gains and I'm not a tax preparer, you want to live in there 2 of the last 5, right? So that's kind of the marks that we want to do depending on their goal. But great question. Move in, buy your fourplex, live there 1 year, bounce. You got a 4-unit with no money down. Let's go. Unbelievable. Rule Vista Street real quick. So again, sometimes it's been in the rule for a long time, but effectively for street, it's not happening. VA rehab is sort of there. It came back. That was one of the COVID deaths that happened. AFR is doing it. Some banks are doing some sort of pseudo rehab loan, but they're not the best in my humble opinion. It doesn't meet the federal rule. Generally construction, most people are doing civilian loans and then trying to bounce to VA later. Construction, there is no VA construction, period. Just know once VA finally says we're going to bring it back, it's at least 6 months. So they do a circular and then 6 months later we have it. So just for those of you who are asking when, it's not even on the table and it's at least 6 months before it becomes live again. So there's no VA construction period. 100% cash out refinances. Yes, they can be done. And I'm bringing up refinance for realtors for this reason. Pulling out all this equity, right? These hundreds of thousands of dollars we've gotten over the last couple of years. People are buying second homes, rental properties, lots, right? So even though you can get more cash out because of VA than any other loan, if you go above 90% loan to value, the rate jumps like 1.5%. So nobody does that. Just effectively 90% is the mark. Okay, not every state has actually a state program for VA. Oregon is lucky. We do that. We love our veterans. When you would use it, if they've lost their entitlement, right? Like somehow bankruptcy, can't go federal VA, we can go ODVA. Just know it's not 0 down, it's 5% down. It has mortgage insurance. Here's the one though, where I see a lot of people doing ODVA, non-warrantable condos, not federally approved condos. So that condo association that nobody can buy because of the wrong mix of renters and buyers, right? That you can buy for 50 cents on the dollar, ODVA. Let's go, just 20% down, buy that special secret sauce property, done. And just know, manufacturer and non-warrantable are not on their website. They do it, so if you check on the website, you're not gonna see that product, just know they actually do. The last cool thing is we get to pick our appraiser. So no VA portal, no HBCC, literally if you know the appraiser, we can schedule it, let's go. All right, any questions real quick on the secrets? Literally most important of this course is I wanna get you into how you win, right? How are you gonna make more money, save time, finish number 1, and then have freedom in life? Let's give you some practical ways to do it. Any questions before we jump in? Anybody? Wow, either I'm doing a great job or you're really bored because nobody's talking. All right. What we're going to do is we're literally going to visually kind of take you on the entire transaction, right? From your clients dreaming, they're on the website saying, oh my gosh, can the American dream of homeownership be a reality, right? Like they're looking on Zillow, Redfin, your website ideally, right? All the way to happily ever after. So the first stage we're going to take is just a little tidbits and helps for that hacks, pro tips for dream and pre-approval. All right. Don't artificially have your clients buy less house. VA does not set the interest rate. VA does not set the interest rate. I hear lots of bankers and brokers with horrible rates just flat out lying, saying that. It is not true. There's up to 1% variance every day in rate from those of us who are the best to the rest of the market. So literally, why would you, because at 3,375 today with a $2,322 payment, this is gone, right? We already missed the 175. We've been telling you for a while rates are going to raise. They could have bought 650 at 2233. Today it's 542. Lost 100 grand, that's okay. But don't give up 80 grand automatically by going to the wrong lender, okay? Pick the right lender, 1% variance every day. Now, what do we hear almost every day from our buyers and our sellers? Man, I wish I had a magic crystal ball. When are rates going to go up? When are rates going to go up? When's it going to crash? When's everything going to change? When's the recession coming, right? We have a magic crystal ball. It's called history. It's happened 170 years in a row and 17 times. We know what is before us. And so I'm just showing you recessions over the last 4 quarters. And one of the major indicators has to do with inflation. So I'm pretty sure you and I know everything's a lot more expensive. Cars, 41% in 1 year alone, okay? The Federal Reserve has come out and said it would be irresponsible for us not to act. We have to. We cannot let the 80s occur again. Worst inflation since then. We have to act. And so the president and CEO, Bullard, came out and said, hey, I'm not the only call, but here's what I want. So here's the magic crystal ball. So this 3.375 today, I want that up at least 0.5% by March 15th. That's in less than a month. So when the Fed meets again, if Bullard gets his way, 0.5% jump. Next, goes, I want at least a 1% jump by July of this year. By July, I want to be 1% higher. So we're seeing 4 3.75s, right? And if that happens, everyone kind of expects a 2% jump by the end of the year. So first off, we're going to give you a copy of the chart so you can leverage this to help people win, okay? But so please unmute. Here's the interactive part, because we've got some really people who've been through the 80s, who've been through the 90s, right? What do we do in light of knowing the market's going to do this? Knowing our $1.2 million homes have already lost $200,000 in equity, right? Which clients should be listing today? How are you going to make money? How are we going to get more inventory today in light of what we know is going to be occurring within 1 month? Who should we be calling?
Veterans.
Everyone, sure. Specifically, who's most at risk? Like, who should you call first? Okay, I'll tell you.
First-time home buyers?
Well, that's buyers. So great. We'll come back to buyers, and I agree with you 100%. Listings, right? Who should be selling? We need inventory, right? That's the hardest thing. It's like, there's no inventory. If my daughter wasn't pregnant today and I didn't have to have a place for her for a few months of transition, I would have my property on the market today. I literally would have listed yesterday, right? In light of what we know. All your high-end homes. That person that has $300,000, $400,000, $500,000 of equity, right? Like they're like we're at the top. I don't care if you maybe will lose 1%. When those things devalue, they devalue 10, 20, 30%, right? I don't care about 1%. We're at the top. Get your money. Today's the day we list. Let's go. That's why you work with me. You're going to make $500,000. We list today. We're not going to make $400,000 3 months from today. We list today, right? Let's go. Now, was it Clark who said the first-time home buyers?
How's Laura?
Oh, hi, Laura. Sorry, I couldn't hear very well.
Okay.
Great answer. No, she's exactly right. It's your first-time home buyers, right? Because that yes, that $300,000 house may go down to 2, but as interest rates go up, they can't afford the payment. So that first-time home buyer, they keep saying, the values may go down in a few months, right? I'm waiting for the crash. You're not going to be able to buy. If you can find something that works, if you can find something that can afford it, if you can find this first step in life, right? That's how we become wealthy in the United States. It's just the first step. You pull the trigger. We do it today. Let's get you into homeownership. You're not going to be a renter forever. We're not waiting for a 10-year cycle, right? All right, cool. Pre-approval letters. Before the home hunt. I don't know how many times it said, this should be fundamental, right? And this is according to NAR, this is according to the VA, this is according to the best, the people that do 300 loans, transactions a month. They don't waste their time. They don't waste it. They're going to buy more home. Again, shockingly, 50, 80, 100 grand more. They're happy, you win. And there's less fallout. They're saying, hey, until they're actually pre-approved, until they have that COE, we're not going to artificially inflate the market. Real quick, what percentage of transactions fall out in our market nationally? What percentage of escrows that are opened do not get to the finish line? Remember, Mug, first person to get it right, just guess. Throw out a number. What do you think? Your real
50%.
What percent?
20.
A little higher. Good guess. pick a number higher. Fine, I'll
30.
just tell you, nobody gets a mug. 24%, so basically 1 in 4. 1 in 4 times your transaction is not going to close. A lot of times they just weren't pre-approved. That is artificially forcing the market up, right? That's time wasted that you could have literally been working with someone else. Pre-approve them first. All right, here's the biggest key for VA. Literally, to make it as ridiculous and fundamental as it is, it'd be like if your banker didn't pull credit. Can you imagine if your banker told you that they were pre-approved and they've never even seen credit? You're like, what, you know their name? That's cool. That's not pre-approved, right? A certificate of eligibility is step 1 per NAR, per VA, for everybody. It literally says, I've served, I have the right to use a benefit. I have a benefit. Who's not doing us or us greedy, lazy bankers. A bunch of us are taking trips, we're coaching, we're doing things. Just spend 1 minute. All I have to do is get in the VA portal, social, year of birth, not even their full birthday, immediately a certificate of eligibility. Or I don't have one, I have to get a DD-214, I have to wait 4 or 5 days, not pre-approved. That's disclosure, so just know it's happening every day. All right, cool. So home hunt accepted offer, right? How do we get more offers accepted? Such a competitive offer. And I literally had 2 realtors yesterday tell me they're not getting offers accepted. I'm not having the same experience. I can't say every offer the first time isn't getting accepted, but our clients are winning every time eventually. So I'm not sure. So here's some things that'll help you, right? Fundamentally, list price versus offer price. And just know 80% of transactions that come into our office are written incorrectly as a buyer. Everyone gets the listing right. Almost nobody gets the offer price right. So unmute, please. Really easy mug for somebody, not even a tough one. So if you were going to list this person's house, would you list their property for $600,000, again, selling, or for $599, which is the proper list price?
$599.
Who said that?
Clark.
Okay.
I don't need another mug.
Clark, we can't get you more mugs. So
I was just saying, I don't need another mug. Give it to someone.
yeah, so let's do this. Let's let someone else engage in, Clark. So thank you. I appreciate you being here. But for answer questions, let's go someone else. Okay. So flip-flopping it, right? Now, why is let's say for a mug, why is $599 the better offer than 600, or sorry, list price? Why? Why do we say $599 instead of $600?
Because when people are searching for the homes, they're going to put in their max budget. And if they're not even going to see the 600.
Yeah. And sales psychology, right? It's why there's 99-cent hamburgers. It feels like so much less. Like it's only $500,000, not $600,000. It's just sales psychology, right?
Well, Chris, I've been told that you're going to
Yeah.
miss all the buyers that are looking for the 600 to 650,000 though. That's why I use 600 rather than 599, which sounds better, but you're only going to get the buyers looking up to 600. You're not going to get anybody looking over 600.
Nice.
Because people usually go within a $50,000 price range. So that's the way I was told to do it. I thought it would be better this way, the 599 too, but I've since changed because that makes a point.
Okay. That sounds like Steve Wickham's voice. Is that you, Steve?
Yeah.
Okay, I thought I recognized your voice. Hey, welcome. So,
All right,
let's flip it, though. So you guys have different strategies for listings. And again, most typically do this. Sounds like Steve has a different strategy and he is a top producer. So something's working there where we can win on the offers. Again, this looks small, this looks big, right? When we offer, everyone's still offering $599. We don't, we offer $6. It's only $4 difference per month in payment. Remember, we offer what looks huge. We list what looks tiny. We offer what looks huge. Just that, again, 8 out of 10 contracts come into our office written incorrectly, and then they're saying, hey, we're going to waive something instead. So just, that's going to win you more, right? Sales psychology. No concessions. We know we can't ask for concessions in a seller's market a lot of times. Just raise the rate a little bit. Simple, truly zeroed down with VA. So instead of a 3,375, let me bump it to 3,875 and increase the payments $150 a month. We're not asking the seller for concessions, right? Let's go. Okay. Number one request by realtors. Done. It took about 6 months to develop. So this literally has helped multiple of my realtors win in this biz. Mark Townsend down in Roseburg, as an example, wrote like 11 pre-approval letters from 7 p.m. till midnight on New Year's Eve. Like he was grinding and winning transactions, right? It's the power of the pre-approval letter. You said, we have to be able to write pre-approval letters from our phone so that we can win transactions. So literally, we set all the parameters, you get an alert, tester testings his name, 647,200, max loan limit, 0 down, can put up to 500 grand down. We saw his bank statements, only 30 days to close, VA, how much they can put for concessions. Don't need them, but if you ever need to do a repair addendum or modify what the terms are. Pre-approved, you get the alert. Hey, cool, I can write. So as an example, we're pretending Mark wrote for 620, and this is real, it was a different property, but 625,005 came concessions, was somewhere down in Roseburg. So at least literally texting 11 p.m. with the listing agent, right? This is real, this is your guys' life, right? 11 p.m. on New Year's Eve, he's like, okay, if you increase the sales price to 630 and you get rid of the 5K seller concessions, we're in contract, but tomorrow at work, I know there's 15 other offers coming in. Well, most bankers aren't going to answer the phone at 11 p.m. New Year's Eve, right? He had the power. He simply generated a new pre-approval letter. We won. That's live. All right, VA non-allowables. Let me help you protect your buyer. Let me help you protect your seller, and let me help you protect yourselves. Okay. So on the new ORF forms 2022 edition, if we're going federal VA, of course, it should be checked. Whoops. Excuse me. Now, here's what you do on these two boxes. If your seller is going to pay their concessions, paying closing costs, will pay. If they're not, will not. This doesn't mean it's VA. This means, is your seller paying concessions or not? Will or will not. Simple as that. Here's the last way you protect your seller. Make sure it's written in a dollar amount, not some percentage, not something, it gets confusing for people, right? Is that based on loan amount, purchase price, what? There's the exposure. Will pay up to $9,500. Now for buyers, right? Buyers agents, here's how you protect your buyers. You write seller to pay up to $9,500, dollar amount, never a confusion. Closing costs, prepaids, and VA non-allowables. You need all three. And if you're newer to the biz, do not lose money, do not lose money, do not lose your buyer's money. If it's civilian, you say closing costs and prepaids. Okay, understand what the buckets are. It's mortgage, right? We have to make it super confusing. So ultimately, they're all just closing costs. It's what it's going to take to get to the finish line. There's $9,500 of them, but understand what the buckets are, okay? So closing costs, whoops, are most of the cost to get to the finish line. Prepaids are your escrows, your taxes, your insurance, any interest, separate bucket. Don't necessarily have to have that included in the loan. And then lastly, per VA, some of your closing costs and some of your prepaids can't be paid by the veteran. Here's why it matters. If you only write closing costs and don't say the other two buckets, a shrewd seller or a listing agent could literally say, sorry, $6,000 of those costs are prepaids and VA non-allowables. You only asked for this bucket. My seller gets $6 grand of either the buyer's money, or since you screwed up, you might be giving away your entire commission check, right? So just protect yourself. List all three buckets. You can't lose, sellers there. Easy. Now, here's how you protect your paychecks. What are VA non-allowables? My money, you don't care. Attorney's fees, you don't care. This we'll talk about, you care. Prepays doesn't happen on VA. And then HUD FHA inspections, you don't care. Brokerage fees, how you get paid. You cannot be paid by the buyer. Please pay attention if you're not at this point. Literally, someone has lost their money, their entire paycheck on VA. I've seen it personally 5 different times by people who didn't know. Learn from someone else's pain. Okay, unmute for a mug. When could we have a scenario where you can't get paid because the buyer can't pay you in a purchase?
FSBOs.
Yeah, Tracy Ellis. Hey, Mike and Tracy, please get together. Awesome, immediately. For sale by owner, how do we correct that? We try and create dual agency, right? You have to represent that seller, even if it's for no money. You got to get your dual agency, and then the seller will technically pay you. Awesome. Learn from someone else's pain. Okay. And thank you, Tracy. All right. We're going to talk about how to close earlier on time. Every single time there's a critical step here between processing and underwriting. It's all about the appraisal. So your part, please, 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 please get us the entire purchase agreement with addendums day one. I've sometimes gotten them weeks later. It's tough to get to the finish line on time. Day one. My job is to order the appraisal day one. Okay, you give me the purchase agreement day one, I will order the appraisal day one on a VA loan. Now, some people get nervous. They're like, hey, there's an inspection, we might rescind. I don't care. Worst case, I'll give the appraiser $100 because they've done some work. Just the cost of doing business. For us to get to the finish line earlier on time, I order the appraisal day one. Let's go. If brand X banker broker is saying they can't order it yet, that means they don't have a COE. You're not allowed to order the appraisal with that certificate eligibility. And if they don't have a COE, that means they gave you a fake hold, they lied, they weren't pre-approved, eyes wide open from the very beginning, okay? An amazing thing about VA, a misnomer we're gonna correct, it's one of the fastest appraisals in market. We literally use VA purchase agreements to win contracts in Douglas County on the coast because there's 60 days on a civilian loan, conventional loan, 15 business days guaranteed VA once it gets picked up, 3 weeks. We use VA speed to get us into contract. And lastly, Tidewater. Remember, everyone's going to battle to get us to the finish line. If the appraiser's not hitting value, 3 days before it's due, he reports to everybody and says, help me get the right decision. Give me information that gets them into the home. So at least have a chance. Required and win. Okay, everybody on mute, please. This is all mug questions. I'm going to ask you, please throw out knowledge. What inspections are required for VA? Anyone? What inspections are there? Let's try that. Just throw out, what inspections do you typically get for a guest?
Whole home,
Mobile home?
whole home.
A whole home. Yep. Not required for VA. I know most people, we advise it, of course. VA does not. Appraisal. What else? Let's say it's rural. What other inspections are there a lot of times?
Well, and
Septic and
septic.
well.
Yeah, well and septic. Are those required for VA? Nope. No, they're not. Neither one. The only thing for VA and the reason it's required is because in the state of Oregon, we have a water purity test, right? We have to make sure there's no arsenic, no lead, that it's safe for our people to buy. So because of that rule set in Oregon, VA says we want to see that too. So literally, even though it's a really good thing to do, I never want to see the whole house, like ever, right? We do need that purity test. All right.
How about termite inspection? I had another VA lender require that.
Yeah, that's because they don't know that it's Oregon. They probably work in California. Your lender was a generalist and didn't just inform them that this isn't California. Literally, when someone gets a little weird, we've taken a picture of the map and circled California and circled Oregon saying we don't live there. Even though a lot of people in California claim we're the biggest city of California, we're not. We're Oregon, right? We're different. So yeah, that's a Cali thing. All right, I'm going to go fast then. So engineer cert, here's a way you can help us because those can take 2 to 3 weeks, right? When all of a sudden at the finish line, the appraisal's in, we're like, an engineer cert? Why didn't you figure that out weeks ago? Here's how you can protect your transaction. Take a video of the whole property when you have a manufactured home. If anything's connected, the deck, the porch, the garage, a cover between garage and home, engineer cert, okay? If it's freestanding, so like for example, a deck on 4 posts, not actually against the house, no engineer cert. But if they have a hanger on the house and did it proper, we're getting engineer cert. So protect us, protect your clients. Literally, when you're doing your walk around, we're in contract, just say, hey, I think we got something connected. Yep, we do. Thank you so much. We'll order it day one. We'll close early. Okay, CO2 detectors, even though it should be a well done, there's a way that people get burned. Obviously, if you have a manufactured home and there's gas, you need CO2, right? But if there's an attached garage, so manufactured plus garage attached, even if there's no carbon monoxide, you still have to have a detector, even if there's no gas going to the property, because potentially someone could drive into the garage, shut the door, forget to turn it off, it's happened, and kill the entire family. So for health and safety, attached garage, manufactured VA, FHA, we got to have detectors. So just know, you know, I mean, that could spell out a transaction. All right, signing. So now we're at the signing. How do we leverage this? So the best of the best demand this. The state of Oregon wishes this was a common practice. Okay, it's called a pre-signed doc review. I'll show you what it looks like. We do it every time. It creates an Yeah, we're right on schedule. It creates happy, stress-free closings. The escrow officers know that work with us, like our clients always know walking in, there's no surprises. We get more referrals because of it. Side note, if your clients are closing out of country, I had one in Italy, they're probably going to have an embassy. It was $1,000. It was a month of notice. And some countries, unfortunately, due to COVID, aren't even open. So just plan in advance if your buyers are going to be out of the country. Here's what that pre-signed doc review looks like. So I take the loan estimate and I compare it to the closing disclosure. And I know most of you do this for us. So thank you for doing my job. You'll get the settlement statement from escrow, right? Escrow sends it to you and the buyer as well. It's my job. It's my loan. And this was called TRID 2008. They literally changed all the disclosures so the consumer could see really easily what's the final numbers versus the estimate. Like it's so clean and clear, like what happened. So on this very real example that just closed this last month, mortgage to the penny, PITI total payments, yes, $14 less, Mr. Borrower. And our cash to close was almost $2,000 less. They're pretty happy, right? Here's the thing that never gets shown. The note, the contract, like the mortgage Bible, like everything, right? So I want, and we do this every time, you want the loan estimate, the CD, and the note. All the numbers, and then make sure I'm safe. Any words in front of note equals be afraid, equals predatory. Note all by itself means safe, okay? First line, what the loan amount is. Item 2, I will pay interest at a yearly rate of 2.375%. That guarantees it's a fixed rate. If you see two numbers, there's an adjuster margin equals variable rate, but it also says variable rate no. Payments, no payments until March, right? They get to skip a month for a buyer, and 52 minus 22 is 30 years. Right to prepay, full, partial without a prepayment penalty. Of course, no prepays in VA. I wouldn't do that to you. Due on the 1st, not late until the 16th. Civilians pay 5%. You're a veteran, you only pay 4%. So again, this client gets to walk in the very next day. Like we're doing a Zoom with this, right? Every single term is perfect. You're safe. It's exactly what you thought, except your payments are lower and your cash to close is lower. Have an awesome high five signing tomorrow. You own a home in just a few hours. Like, how stress-free is that? I'm sure you've had transactions that were amazing, and then you had stress at the finish line, and instead of referrals and more business, it just was clunky. Lastly, how we win. And a lot of people think that the relationship ends at the signing, right? It's just beginning. We want their next transaction. Because 72% of clients said they work with you again. They like you if you just follow it up. We want their kids. We want generational wealth, right? Here's how we do it. Referrals, first off, you start asking during the transaction. Just like you raised your kids when they're in the home, not when they move out, we teach them to give us referrals. You're twice as likely to get a second referral if you do that than even the first. We ask on high moments as well. So the best leverage the high moments in a transaction. And the highest moment in the transaction is when they got the keys, right? They're walking into their house for the very first time. So what the best do, and if you're not doing this, just know they're videotaping it. So when someone's walking in and touching that exquisite real rock granite, countertop, like, oh, you've got a photo of that, right? A video of that. When they're looking at the garage, the ensuite, when the kids are picking their rooms, when they're playing on the playground in the backyard for the first time, screaming, right? You videotape it. With their permission, you post it online to social media, you tag them, you bless them with a memory forever they wouldn't have had. And then they share it, and then you get referrals. That is the highest moment in a transaction. Reward them and reward yourself. Okay, one other way you can reward the veteran and bless them later on is if they have at least 40% service-connected disability or their surviving spouse, they can get their property taxes reduced. And depending on the county, up to half, 50%. So we made it easy for you. Here's the information. I actually found the form. It's sometimes tough to find the link. Bless your veterans. So post-close, once they own it, literally fill out this form, get your property taxes reduced. Lastly, if you want to be a specialist, if you want to learn more on VA, once a year, the Oregon Realtors Association begins the national program, the MRP cert. So if you want to get certified in VA, once a year to Oregon, it's November 4th. You can sign up right now. I'm the instructor every year, so you get 6 more hours with me on VA to raise your standard. All right, guys. Okay, so everybody please unmute. It's a report card on me. So it was, remember I had 3 goals, right? So you get to rate me now. How did I do it? I'm a little nervous because you were so quiet. So did you learn anything, at least one thing today? Please shout out yes or no.
Yes.
Yes.
Yes,
Okay.
yes.
And then Tanya, we had a little bet going. Did you learn at least one thing?
Yes, I did.
Okay, boom, I checked it off. I already assumed as much. So, I self-graded. Okay, so more importantly, right? I know you're going to get your CE hour. I know you learned something. Are you going to do something different? Are you going to say, are you a veteran active military? Anything different because of today? Are you going to make more money?
Definitely.
Definitely.
Yes.
Love that one.
For sure.
Nice. Boom. Well, I for sure already marked it. I assumed as much because you're all, And then lastly, the have fun part, right? So it's kind of subjective. So you get an alternate of choice. So you can either, and this dude's really excited about this haircut he got, right? So you can either, for the fun factor, get your haircuts all year from his barber. Sounds pretty fun. Or you can listen to this guy speak again. So how many people are voting for his barber all year long?
Nope.
How many people like to hear me again?
Yes.
Yes.
Yeah.
Yes. You like me. You really like me. We had fun. All right, guys. That's it. Western title and escrow. They're amazing. Truly, the finish line matters so much. The weakest link to a chain can break the entire chain. I've had transactions that because of escrow that should have been 10 referrals were bad at the end and we lost business because of Tanya Silky smooth transactions. Tara, I should name every person there. We get referrals. It's
Thank you,
easy.
Chris.
It's fast. Just they're so good at what they do and they bring value to me and raise the standard. So Western, thank you all for what you guys do. I appreciate you.